Hello, everyone, and welcome back to Global Campus Group. In this lesson, we will study the importance of managing personal finance. This is a very important part of Unit 3, Personal and Business Finance, because it helps learners understand how money works in everyday life. It covers how people make financial choices and why good financial management matters for long-term stability. Today, we will cover four main areas. First, we will look at the functions and role of money. Second, we will examine different ways to pay. Third, we will discuss current accounts. And finally, we will explore borrowing, saving, investing, and insurance. By the end of this lecture, you should be able to explain not only what money does, but also how financial products and financial decisions affect real life. Let us begin with the first area, the functions and role of money. Money is central to both personal life and business life. Money performs four main functions. The first function is unit of account. This means money gives us a common measure for valuing goods and services. The second function is means of exchange. Money allows people to buy and sell goods and services without barter. The third function is store of value. This means money can be held and used later, moving purchasing power into the future. The fourth function is legal tender. In teaching terms, learners often understand this as money officially recognized for settling debts. The role of money is broader. It enables trade, helps measure value, allows wealth storage, and helps settle financial obligations. Money's role is influenced by personal attitudes. A risk-averse person may prefer secure saving, while others accept uncertainty for higher returns. Attitudes to borrowing and spending also differ. Some avoid debt, while others see it as a tool for major purchases like education or property. The next influence is life stage. In childhood, needs are limited. In adolescence, individuals begin handling small amounts and forming habits. In young adulthood, costs like rent and bills arise. Middle age brings greater responsibilities like mortgages and retirement planning. Culture, life events, technology, and interest rates also shape how we use money. High rates make borrowing expensive but saving attractive. Planning expenditure helps people live within their means, control costs, remain solvent, and maintain a good credit rating. It also allows for future purchases, generates savings, and provides protection against loss, illness, or the effects of inflation. In modern finance, there are many ways to pay. Each method has its own features, advantages, disadvantages, and suitable use cases. From cash and debit cards to modern tools like mobile apps and real-time systems like faster payments and CHAPS. A direct debit allows a company to collect money, while a standing order is set up by the account holder to send a fixed amount. Bacs is reliable for salaries. Faster payments is near real time, and CHAPS is used for high-value transactions like property. A current account is central to day-to-day activity, allowing people to receive wages, make payments, and manage money digitally. Types include standard, packaged with benefits, basic for accessibility, and student accounts with interest-free overdrafts. Borrowing products include overdrafts, loans, mortgages, and credit cards. Each serves a different purpose for the individual. Saving is lower risk with easier access, while investment, like shares, offers higher potential returns with greater uncertainty. Insurance products like car, home, and health insurance help protect individuals from significant financial loss. In summary, understanding how money works and making informed decisions about borrowing and saving is key to financial stability. Thank you for watching this lecture on personal finance. In our next lesson, we will explore financial institutions. I'll see you then.